Hello and welcome back to Andersen podcast series Everything Tax. And today with me in the studio is Dr. Josh Bamfo, who is the leader for transfer pricing across Middle East, Asia, and Africa region. Welcome, Dr. Josh, to the show.
Thanks for having me, Anurag.
Dr. Josh, many times, when we go and visit the clients, there's a lot of, tax discussion happening around the region. Recently you introduced corporate tax. So a lot of tax discussion happening around in the region. So I want to understand, with over 2.5 decades of your experience, how the tax landscape have changed around, the Africa and Middle East perspective.
All right, thanks. Very good question. Generally, the tax regimes have not changed significantly, but a key aspect of the tax regimes that has been changing significantly is transfer pricing. I know that's my area of focus. I quite remember when I was relocating from from the US to Africa, that's sometime back 2012. There were about only 2 countries in Africa that had effective transfer pricing regimes. That was South Africa and Kenya. You fast forward today, 10, 11 years later, and over 50% of the African countries have some form of transfer pricing regime. And we're talking about, that would be over 25 countries. So really, that has been a rapid development in this particular area. Where I sit today, in terms of location, Nigeria, they've had transfer pricing regime since 2012 to 2013. Same with Ghana, and others have been following suit. So what is important for multinational enterprises that already exist in the sub-region, or those who plan to enter into the region, should be aware of the transfer pricing landscape in Africa. And what you need to bear in mind is, first and foremost, compliance requirement. Are you required to disclose some information about your related party transactions? Those are called the filing of transfer pricing returns. Are you supposed to prepare documentation to demonstrate that transactions you have with your related parties are fair and reasonable, which they call the arm's length principle? You need to be aware of that. You also need to be aware of each region and how aggressive the tax authorities are in terms of ensuring that you comply, and in terms of whether they are going to ascertain whether you are shifting profit out of that country. So those are some of the information that multinational enterprises have to be aware of. And it's even important for, your jurisdiction, be it UAE, given that time immemorial, UAE has been seen as some kind of regional hub, where they can have a regional hub or a holdco that support a number of operating companies across Africa. Mm-hmm. So that awareness is important so that they can know the implications for the subsidiaries that they manage out of UAE. So having some knowledge about the landscape in terms of what is happening rapidly in the transfer pricing space is very important for multinational enterprises in general, and those who are either headquartered or have a regional hub in the UAE sub-region.
I mean, I come across a lot of groups who has significant presence in Africa. They have been operating within the region here as well. And one thing that I noticed within these multinational organizations, which is, let's say, having a significant base in Africa, is their structure is so multi-layered. So yeah. I mean, you see that grapevine itself, it's like goes over 2 to 3 pages in terms of structuring. Mm-hmm. And when I look into their TP policies, benchmarking and other sort of the TP documentation stuff out there, they are very complacent about it.
Yeah.
And I think the tax authority within the African region out there and within the Middle East, they're pretty aggressive.
Yeah, they are. And I can give you an example of a client that had a policy that governed a central purchasing arrangement where the operating entities across Africa are in the manufacturing of a particular product, and they needed some raw material sourced, globally, for their use. So they had a central purchasing entity in Dubai who then reaches out to these vendors, purchases and on sales to the operating companies in Africa. The remuneration to the Dubai entity was deemed excessive from multiple jurisdictions across Africa. Today, we are supporting this client in about 4 or 5 audits in 4 or 5 different countries on the same transaction. And the way each tax authority is looking at it is different. It gives you a sense of how aggressive some are compared to others. Mm. So the lesson to most multinational enterprises is that, yes, it's important that you have a regional group transfer pricing policy that guides all your related party transactions, that fits into the structure that you have. But it's also important to ascertain or analyze the risk exposures from the perspective of the regions where you have operations. Because the way and manner those tax authorities might be looking at it could be different from the way you, the regional hub, you are looking at it, because your objectives are different. If you're a CFO sitting in Dubai, you want to, you want your taxation to be effective. You want a lower effective tax rate. On the other hand, they want to maximize tax revenues. So we need to align those two perspectives. So that would be my advice. It's important that you have a policy looking at it from, the group level, but also try to understand the dynamics in each of those jurisdictions so that you can mitigate your risk exposure and save the group some much needed money.
That's so valuable advice, Dr. Josh. I remember, probably last year I was reading about one of the articles within Andersen as well, that you were supporting one of the client out of Nigeria for one of the landmark case in transfer pricing. Will you want to touch base something about that?
So yeah, we've been supporting a number of clients in some of the major cases. Some of them are not in the public domain, so I will not be able to mention that. But the good news is that at least now, when you look at Africa, there are a few jurisdictions where we have precedents because court cases have been concluded and we have a position on that. So, for example, if you go to Zambia, there's a Nestle case that was settled, right? So that gives us some precedents. If you go to South Africa, there are a couple of them. If you go to Kenya, there's the much known Unilever case, which led to Kenya actually having TP regime established. But there are more and more cases of such that are ongoing, some through the court system, others going through negotiations. And we've been part of most of those ones. And we are proud to say that Andersen is in a good position to support a lot of these multinational enterprises, given the focus that we've placed on transfer pricing as a specialized area in taxation. The good news is that the way we are structured globally, we have center of excellence that supports a sub-region, and that we encourage development of transfer pricing practices locally, because you need that local expertise combined with the technical knowledge and experiences of other jurisdictions to give our clients the best service that you can actually think of. So if I look at UAE, for example, it's so exciting, to know that you guys are developing your TP practice. You have well-experienced people in that area. And there's also the support that is going to come from the Center of Excellence, which is not located in one jurisdiction, but multiple jurisdictions within the Andersen network across the globe. And I believe that we'll be able to offer our clients the best of services, be it in UAE or anywhere across the world.
Oh, that's so nice. Dr. Josh, I'll take one last question out there. So since you are here, why don't you share some of the instances or probably the risks that you probably have seen in some of the large cases, like these multinationals who have they'll be having sort of policy, they'll be having documentation because they're operating globally for sure. But from your experience perspective, you've seen so many people over 2.5 decades. So what are the common things that people miss out?
So one thing, and this is very even important for UAE, is that the kind of structures that businesses use to adapt to make them tax efficient have to be relooked, because we are looking at a different era altogether. You already know that there's going to be Pillar 2 solution that will be implemented in UAE and other jurisdictions in the Middle East as well as globally. What that tells you is that effective tax rates in some of these jurisdictions that traditionally were either zero tax regimes or low tax regimes might not be the case on a going forward basis. So if I'm a multinational enterprise, I have to relook my structure and say, hey, I still want to be tax efficient, but I need to look at the impact of these potential changes on my current structure. So that's one thing they need to look at. Secondly, either the status quo or the future model, you also need to, as the example I gave, what are the exposures in the operating companies that I'm either the regional hub of or the holding company of, because you cannot only look at it from the group level without looking at it from the local level. And input from the local officers, would be very helpful. You really need to listen to the operating committee and say, hey, what are your, specific challenges you are seeing in the area of general tax or transfer pricing that we need to be aware that would inform the way we implement this policy. There's been a tendency for big multinational enterprises to have a one-size-fits-all policy. They have a template, and they feel that template applies to every jurisdiction. They only have to have an audit to realize that what succeeded in country A might not succeed in country B. So having that feedback from the various offices or jurisdictions is going to be very important. So those are some of the exposures that I think multinational enterprises can easily mitigate if we have conversations with them.
Thank you so much. Thank you so much, Dr. Josh, for being here with me and sparing your time for your valuable, advice and experiences that you share. So I really appreciate your time.
Thank you very much, Anurag, for having me.
Thank you so much for watching us, and remember to subscribe us on Spotify and YouTube.